Bitcoin is halving for the fourth time. In previous cycles, there was a brief price correction following a halving event, and then prices surged again. But what's different this time?
It's very hard to predict or say with certainty that the past cycles will repeat for this halving event as well. In the past, mostly halving events have led to price increases over a longer term. But you can argue that it's because supply is decreasing, but demand is either remaining the same or is increasing. But there's no guarantees that that'll continue to be the case.
You can see the impact of halving has been positive for the Bitcoin prices. So you can see in the first halving, since the halving date, the top of price was about 95x. For the second halving, it's about 30x. And the last halving was 8x from the halving date. And as you can see, for every halving, Bitcoin has been making newer highs. And there is potential that for this halving itself, a new high will be made as well.
The total amount of Bitcoins that can ever be created is fixed at 21 million. So far, more than 90% of that total supply has already been mined. When Bitcoin is halved, the reward for mining new blocks on the Bitcoin blockchain is slashed by 50%, reducing the number of coins in circulation.
The way that the Bitcoin protocol is programmed is that the supply curve or the emissions curve effectively halves every 4 years. And what will happen is that the supply will go from something like a 6.25 BTC every 10 minutes to something like 3.125 BTC every 10 minutes.
There is one key difference in market dynamics this time. The launch of US spot Bitcoin ETFs in January 2024 has increased demand, and that could lend more support to Bitcoin prices.
This is the first time in the history of Bitcoin that we have ETFs in the US that allow a lot of institutional investors on Wall Street to invest in Bitcoin for the first time. So interestingly, we've actually hit an all-time high in the price before the halving. And that's unusual because in halvings in the past, we usually hit a new all-time high about 3 or 4 months after the halving. So because we've already reached that level before the halving has even happened, it creates a lot of excitement in the market because a lot of people believe that this could be a market cycle that's bigger than all the others that happened in the past because of this new institutional demand.
One trend is clear though. The price surge after each halving is narrowing.
It's actually diminishing returns in terms of the impact of the halving. And the reason is also because the market is growing bigger. There's more liquidity, and market is have more and more experience in dealing with the halving and the liquidity cycle, so they are well prepared for it. Our models are showing that for this cycle, there's a possibility that the Bitcoin prices, wherever it is on the halving date, could about 2 to 3x from where the price is on the halving date. Usually the next 12 months to 24 months.
Bitcoin has had a strong rally over the past 12 months. So is it too late for investors to take advantage of Bitcoin's potential long-term price appreciation?
If someone believes that Bitcoin has a reason for existence, if someone believes that Bitcoin is going to be adopted widely in the world, then given the fact that there are still billions of people, I'd say maybe 7.9 billion people in the world who don't have Bitcoin, and there's only 21 million to ever go around, I would say we're still very early and we're nowhere near too late. Obviously, the volatility exists. I don't think volatility is going to go away anytime soon. If you have a long-term investment horizon, then the volatility probably doesn't really matter. Whether you buy at a 10% high or a 10% low in 10 years' time, I don't think it'll make any difference.
Since its inception, Bitcoin has tumbled by more than 50% from its highs at least 6 times.
So compared to the traditional financial assets, Bitcoin is very volatile, and there's a reason for it. Because it's a relatively new technology, and because the market cap of it is still relatively small compared to the FX or the equity space. Supply and demand is and the flow is very, very plays a much bigger role. So say, for example, if you have a large demand flow somewhere, it pushes the price a lot higher. And for the supply, if there's no supply from, let's say, miners or sellers, for example, it can cause bigger than expected movement in the prices. So, but this will get better as the industry grows.
Besides the wild swings in prices, the cryptocurrency is prone to many other risks, including fraud, regulatory uncertainty, and black swan events.
The number one advice that we give to all of our users is to always keep your account safe, whether it's a custodial account or it's your own self-hosted wallet. Make sure you never share your password with anyone. Make sure you don't let anyone control your account, especially with self-custodial wallets. If you share your seed phrase with anyone, if somebody takes the assets out of your account, that's irreversible. I think there's other aspects like there are like outright scams and frauds that do operate in many markets.
It's essentially an experiment, and no one knows who created Bitcoin. There is no CEO of Bitcoin. There is no customer service department you can call if something goes wrong. And there could be a whole series of black swan events that could happen in the future. There could be a quantum computer that breaks the encryption on the blockchain, and that would have a massive impact on Bitcoin. There's always the risk that a large government around the world, like in the US, will say Bitcoin is now illegal because they try and protect their own currency. So there are obviously things that can go wrong that haven't gone wrong in the past. That doesn't mean they won't go wrong in the future. So it's important for anyone making an investment to educate themselves about these risks.